Transitioning over to a panel, one of the things that we're talking about today, the chain of shipping, is that sort of transforming the way shipping documents are processed, and maybe actually disrupting and replacing shipping documents like bills of lading. And I have three of the best legal minds in Hong Kong on bills of lading, and to introduce to you Chris Howse and Jon Zinke and Catherine Smith, or if you come up and sit down, talk about bills of lading and the difficulties with bills of lading in the modern world. Much of bills of lading are in paper, still in paper. It's sort of outdated system. And I'm hoping that they will talk about their experiences with bills of lading. Thank you.
Thank you very much, and I'd like to disavow any of this best legal minds in bills of lading. Well, what we're going to do is, I'm going to do a very brief introduction about bills of lading, and I'm sure most of you, not all of you here, know all about them and how they work, which is probably why you're here in the first place. And then Catherine and Jon, with a bit from me, are going to talk about horror stories. And the horror stories really haven't changed. I've been dealing with bills of lading for 40 years. And the problem I dealt with yesterday on a steel cargo is exactly the same as the problems I dealt with on a cement cargo off Lagos in the 70s. It hasn't changed. But I just thought for fun, might look at where the bills of lading come from. Where does it all begin? And it really, you go right back to Greek and Roman times. What originally happened, if you imagine I'm a trader, I'm sitting in London, and I want to ship some cargo to Italy, to Rome. I go along to Catherine, and I hire her ship. And I will take the whole ship. And you don't have, obviously, banking, you didn't have banks, they didn't work through letters of credit or anything like that. So what actually happened? I have taken the whole ship from Catherine, and I get my trusted mate, Jon, who works for me, to go with the cargo. And he goes with the cargo, and he goes all the way to Rome, and then he is responsible for getting the stuff discharged in Rome and getting it sold. And then giving it to a trustworthy chap, he comes back again with the money you pay. So the original function of what became a bill of lading was basically a receipt. It was a receipt that was given by the ship owner or the chief mate. They had a chief mate in those days, similar to the sort of chief officer. And what would happen is the chief officer would give you a document which confirmed what had arrived on board and what condition it was in. And there are very few reported cases, partly in that it's a long time ago, but also there's a great statute from about 1350, which is why they clearly didn't need lawyers, which said that if any ship's mate issued a register which was incorrect, his right hand was cut off, he was branded, all his goods were stolen. And that didn't matter whether it's his fault or anyone else's fault, that's what happened. There aren't many records of ships having problems in those days, but that's how it starts. It's a receipt for goods you put on board a ship. As trade starts to expand, you want to be able to deal in goods. And also, you don't want to have to send along your representative with the goods. So what develops is the bill of lading starts becoming a document which gives you title to the goods, and its function changes. It does three things, and this is from probably about 1600. The bill of lading is still a receipt, so it's still telling you what's been shipped on board. It's a document of title, which is vital, meaning the person who holds the bill of lading is entitled to receive the cargo. No questions asked. So you can start trading with that piece of paper. You know, this is a long way from blockchain. This is what was happening for quite a long time, many hundreds of years. And the third function of the bill of lading was it was the contract under which the owner agreed to carry the goods. My example, from London to Rome. And the terms on which you would do it, the responsibilities you took, and the liabilities. So that is where you start modern bills of lading, as I say, from about 1500, 1600, and it really hasn't changed very much right up to the present day to the steel cargo bills I was looking at yesterday morning. The document fulfills exactly the same function. How it is going to change with blockchain, I don't pretend to be able to answer. I found the previous talk fascinating. I think I understood about 20% of it. I clearly have a great way to go, and I'll no doubt learn a great deal. Well, what I thought we'd do is pass you over to Catherine first and then Jon, just to talk about the sort of problems you have with bills of lading. Seeing some of the people in the audience, you know all about this because you've dealt with similar problems. Catherine.
Thanks, Chris. So I was going to give you just a couple of examples of where paper bills of lading go wrong, and perhaps I'm helping Hans in his agenda here as to why electronic bills of lading are the way forward. And the first is touching on Chris's point about the bill of lading being a contract, or evidence in a contract between the cargo shipper in the first place, putting the goods on board the ship, and later the receiver of the goods. A contract of carriage between that cargo interest and the owner of the ship that's physically carrying the goods from A to B. And one of my cases involved a paper bill of lading where the front of the bill of lading stated that it was one type of bill, and that you would expect therefore to see on the reverse side particular terms that complied with it being what it says it is. However, the company that physically produced the bill, and it wasn't the owner or the shipper, it was a port agent in a East African port, had put together this bill of lading, and as some of you maybe from the UK would know, they did a Blue Peter job on it, and it was copied and pasted from somewhere else. And the front part that said it was a particular type of bill of lading on one term did not marry up with the reverse side that was actually completely different terms. So this was presented to normally what would happen is this would be presented to the captain of the ship or the chief mate to sign as agents on behalf of the owner of the ship. So they would sign that bill of lading, creating a contract of carriage on behalf of the owner. However, what often happens is that letters of authority will be issued by the owners or their managers to allow some other third-party local agent to sign the bills of lading on their behalf, and there will be very strict terms as to the conditions on which those documents can be signed on behalf of the owners, because it's such an important document. So in our case, the reverse side of the bill of lading, we would expect to say that the law and jurisdiction clause of the charter party, the contract between Chris and I when I'm the Roman ship owner for the hire of the ship, that the terms of that contract would be incorporated into the bill of lading contract, including the law and jurisdiction clause. And for us lawyers, obviously we're hung up on that stuff, and that's really important to us, as it should be for the owners and the charterers and the hirers and the ship, and the cargo interest as well. However, the reverse side of this bill of lading, although it should have said included those terms, didn't, because our friends at the local agent or guys had just copied and pasted something from somewhere else that they thought looked right but wasn't. So there was a problem with the cargo. There was a small explosion which resulted in the cargo crane being slightly damaged. The ship arrived at the discharge port delivering goods to the party who bought cargo to be received, and they claimed that all of the cargo was damaged and could not possibly be received. And they insisted on a huge amount of security for their claim, and they arrested the ship. They arrested the ship in the local port and insisted on going to the local court to have their dispute resolved before their local court. Now, normally what we would be able to do is say, we should stay in these proceedings in this local court and go off to the country where we've all agreed, or the jurisdiction where we've all agreed this dispute should be sensibly resolved. Let's have a look at the black back of the bill of lading, which we're sure will incorporate the relevant jurisdiction clause. Oh, it's not there. So we ended up stuck, and are still stuck, in this, I won't name court for the last 8 years, resolving what should be a very simple cargo claim. And in fact, on the facts of it, is a simple cargo claim. But because the local port agent had done a bad copying and pasting job and got the terms wrong, we are stuck where we are, and we can't extricate ourselves from the jurisdiction. Although we try some novel arguments to say why we should be able to do that, they so far haven't worked. So that's sort of an awful worst case scenario of where physical bits of paper bills of lading are wrong and have quite big impact on the ship owner when he's trying to defend what should be quite simple cargo plane. The other small case I had for you, in preparation for this, I emailed my colleagues and said, give me your best stories. And they did. And so there was another case involving, again, mostly bulk cargoes rather than in the container industry. 6 bills of lading were issued for seed cargo coming from South America to be discharged in South Asia. And 2 of them were switched halfway through the voyage. So the cargo is loaded, 6 bills of lading were issued, ship sails, 2 were then switch a route halfway through this voyage. The owners weren't told of this, and they were not given no proper explanation as to why a new receiver was demanding delivery of these goods. They refused to discharge the goods until this was clarified, and it's still to this day uncertain as to why the parties in the chain refused to be clear about why there was a switch, and there's an allegation that perhaps it involves fraud. And so the ship sat at the discharge port for some time. The guys who claimed to be entitled to receive these goods then arrested the ship. They said, we're entitled to these goods, we want it. Even though the owner said, well, we've issued these bills of lading that are for the goods to be delivered to somebody else. You're not that person. We're not going to deliver this cargo to you. If we do, we fear that the original party will turn up and say, where are my goods? And claim damages in restitution, is that right, Chris? For the entire invoice value of those goods. So the owner takes a big risk in discharging goods to one party who claims to be entitled to them, when somebody else turns up with an original bill of lading going, hang on, where are my goods? The owner of the ship, as the contractual carrier of those goods, is potentially on the hook for the invoice value of those goods that they've released, which is a big deal. So that's the other sort of horror story. And again, in, I think it was Bangladesh, a ship being arrested in that jurisdiction, it's going to take a really long time to get extricated from there and get out of there. So those are my 2 horror stories. And I'll see if John's got some other ones.
Leave the ship in Bangladesh and have it scrapped.
Well, I'm not sure sometimes I just decide to do that in the car market.
Hey, thanks, Devlin. Hans asked us at one point, and one of the questions was how frequent are the problems with bills of lading? And the ones that we see most frequently are delivering cargoes without production of original bills of lading. And I think the various reasons why that happens. Somebody just says, oh, I'll get the bill of lading in the mail, I'll get it. The storage costs are getting too high, and they somehow, commercial pressures put on them to deliver. So we see an awful lot of these deliveries without production of original bills of lading, which is a fundamental problem. One of the worst cases we had was a case involving a ship from China to New York, I believe, a number of years ago. So long ago, I couldn't even find the file. But our client comes to us. He'd been sued for misdelivering the cargo in New York, and default judgment had been taken against him because he hadn't appeared. And he came to us and said, I had absolutely nothing to do with this shipment. Somebody took a blank bill of lading of ours, filled it out, and put it into the stream of commerce. And we eventually got the default judgment set aside, but and then he refused to pay our fees because he said I had nothing to do with this anyway. But that's another story. That's a potential. I don't know how the blockchain technology would solve something like that, or what it would do. The other one that we have, the other types of claims we have, are where we had a shipment of steel coils from China to Mexico, and the chief mate had properly claused the bill of lading with various dents and rust, and the cargo shows up in Mexico, and the receiver shows up with a clean bill of lading. So the shipper had obviously just taken another bill of lading, or either copied it or somehow issued a new original bill of lading with no clause on it. There was no damage noted, and it turned into a huge problem because we refused to deliver the cargo, obviously, to somebody with a clean bill of lading, and the ship ended up getting arrested 3 times in Belgium. We eventually, I think, recovered the cost for wrongful arrest because it was clear that the bill of lading had been forged. So those are the 2 of the more egregious cases that we've had involved with bills of lading. So, Chris, you maybe have some other
What you're seeing, it's quite extraordinary that there are more of these problems because they are so easy to pull, and they're very common in certain parts of the world. So you're looking really at, I think, at 3 broad problems. But one is the cargo is misdescribed. And what typically is happening there, it's nearly always not the ship's fault. The ship gets the cargo on board, they issue what you all know is called a mate's receipt. The mate's receipt says these steel coils are rusty and chipped on the edges. But the shipper, the guy who's selling this cargo, he knows that if he gets a bill of lading that says that, he isn't going to negotiate through his letter of credit. He isn't going to get paid. Most of the time, the people who are shipping these cargoes are in countries that are going to have a lot of difficulty suing. So the solution is simple. Just take another bill of lading, you issue it clean, you get it chopped by the same agent, you bang it through the bank, you get paid in full. What happens after that? Frankly, you don't give it out. And that is very common. Steel problems out of China. I mean, my problem yesterday, absolutely standard steel out of China going to the Middle East. Anyone who ships steel to the Middle East knows it's got to be blue. If it isn't blue, they will reject it. They'll claim against the ship discharge for. Steel is damaged, nothing very dramatic. It's damaged. What does the shipper do? Just gets another bill of lading. Fills it in, gets the chops on, puts it through, so the bill of lading doesn't match the mate's receipt, but that doesn't matter. It's easily paid over his letter of credit. So problem one is misdescribing. That is frequent. I'm afraid I can't offer any solutions to this. This is where the blockchain people can tell you how it's all going to be avoided in the future. So that's problem one. Problem two, which John's talking about, is the bill of lading doesn't arrive at the port of discharge. Now sometimes that's okay. When I used to work in London, I used to do a lot of oil cargo work between Libya and Italy, and they were allowed to trade with each other. And then that's an 18-hour voyage. The bill of lading never arrived at the discharge port, but that was okay, because it was all people dealing with each other on a regular basis, and you sign various documents, you produce the bill of lading later. But often, as Jon and Kessal are both saying, the bill of lading isn't at the discharge port because the receiver of the goods hasn't paid for it, because he can't afford to, or something's gone wrong, or more likely, the price of the commodity's gone down. So he looks for a reason to reject the documents. Ship arrives at the discharge port, someone turns up and says, oh, don't worry, we'll produce it later. Here's an indemnity. The indemnity should be signed by a bank. You look up your P&I club books, standard wording, always requires a counter signature by a bank. It never happens, because no one will ever agree to get the bank to counter sign. That's very, very common. The other one that comes up frequently is backdating a bill of lading. Letter of credit says this cargo must be shipped by the 31st of December. Right? And remember, those of you who are traders, this is all trading, it's all a game. Because if there's something wrong with the bill of lading, the price is going up, you're away for defect. If there's a defect in the documents, the price is going down, you reject. So the common one is, shipment should be by 31st December, the cargo doesn't get on board until the 2nd of January. You bung someone $5,000 in a brown envelope, the bills of lading get backdated. The receiver of the cargo, if he wants to reject, he's lost his opportunity to reject, which is why you normally want to have someone at the local watching what's going on. But those are all very, very common problems. My only little story at the end of this, similar to theirs, was a poor guy who I acted for in about 20 years ago, who produced a bill of lading for me, which said that he bought 1,500 tons of mung beans. Mung beans, for those of you that like salads, are very healthy. Those green beans you get in salads on the kidney beans. They're quite expensive. This was about $2.5 million worth of mung beans. And he had a bill of lading, showed they'd been shipped on board in Bangkok, delivery into Hong Kong on the good ship, whatever. Turned up, produced his bill of lading, got the delivery order. The master turned around and said, I don't know what the hell you're doing here, I've got steel recast on this ship. And all that had happened was someone in Bangkok had gone along, got a bill of lading, seen the ship in the harbour, filled in the right name of the ship, port of lading, port of Hong Kong, discharge, easy. And then the first person in the chain is obviously involved in the fraud, next two people in the chain involved in the fraud, and then my poor client at the other end was the honest buyer of what he thought was mung beans, instead of which he got absolutely nothing. But there you go. I mean, these problems are common, and they literally have not changed in the 40 years I've been doing shipping. But they have.
No, absolutely.
Well, I'm sorry, they're much younger than me, but in my 40 years at Bank came in. Those of you who are my age may remember cement queues off Lagos and all the nonsense that was going on there, all to do with bills of lading being switched, cargo being taken away, and it honestly hasn't changed. It doesn't matter whether you're in Lagos or Hong Kong or anywhere else. Those are the horror stories. I don't know if do you want us to do 5 minutes of questions then?
Yeah, sure. Yeah.
Oh, right.
I wonder whether you all have some horror stories.
Go ahead. You want to go ahead? That's a question, then we'll ask a question.
Well, my question is in relation to electronic bills. Chris's point about commodity price volatility and rejection of cargo. Like if you bought it one day and then it's not shipped to you for whatever reason, you're like, well, I'm going to reject this because I can get it from my friend down the road for 20% charge tomorrow. How would electronic bills reduce that type of dispute and those problems?
Paul Mallon's going to tell you the answer to that at 11:15. So.
So that's my question. I'm interested to know your answer too.
But, I can ask the audience, ask
Yeah,
any
sure.
questions.
Yeah, sure.
No, actually, we'll go to that.
Okay.
Any questions about importance of bills of lading? I mean, how did it get to this stage? You know, why did they become so important in trade?
The reason the bill of lading is important for those who are traders is it enables you to trade in the goods. So if you go back to my example, way back 1500 years ago, I ship goods on a ship, I take them to a discharge port, my colleague John is there who sells them on the market, hopefully makes a profit. That's the old way of doing it. What bills of lading enables you to do is, there you are in the port of London, the ship owner gives you a bill of lading which says shipped on board 10,000 tons, whatever it is, chocks it, I can now sell the documents. So the documents may have been sold 5 or 6 times before the bill of lading finally turns up in the hand of the buyer in Rome who's bought them. So it enables the reason for a bill of lading is to enable you to trade the cargo while the ship's in transit. And that's why a bill of lading is capable of being endorsed. What happens is technically the bill of lading is made out to order. You put a chop on the back. Once you put a chop on the back, you can sell it on to someone else. With my mung beans, they've been sold to 8 different people before the port plate of Hong Kong bought the paper. It's worth nothing. But the essence of it was you're moving trade forward from I put my goods on a ship and take it to somewhere and I sell it, to I put my goods onto a ship, I get a bit of paper. The bit of paper is the key to the documents. Whoever owns that bit of paper has paid for it, is the key to it. So that's why bills of lading are important. And Paul's going to tell us how it's all much better with Bolero, which is a wonderful system, and has definitely improved things a great deal. And he's going to be talking to you next. I can't begin to tell you how blockchain will help you.
So for your mung beans, if the master of the ship had to authenticate that they were on board, that would have solved the problem, because obviously somebody didn't authenticate on board the ship and they just sold a piece of paper.
Yeah, I mean, if the master of the ship, one of 2 things happens on a bill of lading. It either says, Chris has master of the good ship, whatever, and that's me, my chop, the ship's chop, on the bill of lading. I am represented to anyone to whom that document is sold that I have received on board 1,500 tons of mung beans. What often happens, though, is the original bill of lading is not signed by the master, it's signed by some agents at the low port. There's nothing improper with that, but what had happened in that case is someone had just gone along to the ship owner's office, got a blank bill, filled in all the details, put a few chops on as agents only, and off you go. It's fraud.
So if the master had to authenticate by his thumbprint, everything would have been okay?
Yeah, I mean, if the master's signature and the ship's signature were on it, that would be an entirely different matter. Then you turn up with your bill of lading. Technically what you do is you go to the ship's agent, he gives you a delivery order, and you literally take the delivery order along to the ship and say, give me my mung beans. And when the master says, I'm sorry, I don't have any, you reach your mobile phone and call your lawyer, Paul Pianati.
What is the major kind of impediment to actually changing this system? Because like you said, 40 years ago, it's the same as today. It sounds like there's a lot of desire and there's a lot of money to be made and efficiency to be had in fixing the system, but obviously there's not the kind of impetus to do it. So I'm just wondering, like, what is it about the ecosystem systemically which prevents progress or prevents kind of,
Well, I think there has been some progress. Bolero is an example of that, although I can't say I'm intimately familiar with that. But efforts have been made to do this electronically, so that there is some, and I guess maybe, I don't know enough to know what the problem of it is security, whether the Bolero system or any other system like that is 100% secure. And we've all been talking about two-order bills of lading that are documents and title. There were also straight bills of lading, and I think there might be a difference between the UK and the US law about that. But on straight bill of lading, just instead of saying to order of the consignee, it says to a particular person. So presumably, the ship owner can deliver it to that particular person without obtaining the straight bill of lading. But it's not entirely clear. On the US law, they recommend that even a straight bill of lading be produced. But an awful lot of times you show up and the receiver says, my name's listed as the receiver of this cargo, give it to me. That's another wrinkle where you can have some problems. So, do you have any other comments?
Yeah, in one of the articles from the Baltic Exchange in London said why is now a better time than, say, 5 or 10 years ago for electronic bills of lading. And the argument was now's a good time because the security of the software is better. And also I think culturally there is more of a desire to get involved in the new technology. So I think it's a cultural thing, and also the software apparently is better and more secure. So I think maybe those factors mean that it's more likely to be successful than it has been in the past. But the other factor is that we deal with physical things, and as Chris was saying, the chief mate has to, when it's bulk cargoes in particular, has to inspect the goods and decide whether it is what whoever's presented it for loading on the ship is what it says is what it is. Or with the steel cargo, if there's rust, and someone said, oh look, this is all in perfect condition, please sign here, thank you, Mr. Chief Officer. And you go, well actually there's rust there, there's a dent there. How does the electronic bill, and again Mr. Mellon I'm sure is going to deal with that? Because how is a peer-to-peer network going to incorporate that information on the ground in a port anywhere in the world? I think that's one of the reasons why it's taken a while to pick up, is because you still need that information on the ground from the you're dealing with physical goods, and that's maybe why it's been taken longer to pick up than in other industries.
You've got to remember that certainly in shipping, and I presume to go beyond shipping, no system is going to be perfect. And that's because of some of the countries you're dealing with. I don't know how many people in the audience have dealt with nickel ore, but there's been huge problems with nickel ore cargoes. Now nickel ore is basically you're digging mountains in the Philippines, Indonesia normally. You're putting what is basically a large quantity of earth on board ship. The quantity of nickel in which is normally less than 2%, the rest is literally earth, which is dumped at the other end, and then you go to China. And the big problem with nickel ore cargoes is you get too much moisture in, and that causes the cargo to liquefy, and that causes ships to capsize and people are killed. It's a very, very serious problem. So you would think that's easy to solve. And what you do is you get surveyors to go down to the load port to inspect the cargo to check it's okay. Problem is, some of these load ports are in slightly remote places. You can Google them, you can see them, but they are in places, and we've all had this, where if the surveyor goes on board and says, I'm really not happy with this cargo, we're not going to have it loaded, the local policeman produces a gun and says, I think we're going to leave right now, and you're not going to be taking your notes, and you're not going to be taking your samples, and you are going to be leaving. And the sensible surveyor will say immediately, certainly, and actually I was thinking you're going right now anyway, because there's nothing you can do. But the reason for that is, there's a mine there, it's got water everywhere, the cargo's hopeless, but there's 6,000 people working there. And if that mine gets a reputation for producing substandard nickel ore, 6,000 people lose their jobs. So the local policeman is very well in with the locals. Now, I don't see any system that I've heard of which will cure that problem, because you're dealing, there's no point going on to the local courthouse. There isn't one. Fair trial anyway. So I mean, there are always going to be these problems. All you're trying to do is reduce them. Come on, John.
Yeah. Would the panel agree that perhaps future technology that we're talking about here, digitisation of bills of lading, is perhaps more applicable to the container trade?
Sure.
Because, just to pick up on your point where you say the problem is the master has to sign the cargo, steel, grain, whatever. Well, of course, the container industry is an industry where the master does not know what the cargo is. All he knows is it's a steel box, it could be empty, it could be full of drugs, it could be full of what's actually written on the PL. So it takes away that impediment of the captain having to say, yes, here it is, here's my signature, here's my thumbprint.
Yeah, absolutely.
So I think the container industry is perhaps going to be the guinea pig for this. Yeah?
Yeah, and I think also what little I know about blockchain is that they, not only will you know where that container is at all times, you'll know what the temperature is.
Yeah.
You'll have a lot of other information you can get, and I believe if, for example, there's a delivery date and the delivery date's missed, somehow you can undo the whole transaction. Is that right, Alan? Or I think.
Yeah, well, that's the idea behind having a smart contract, being a bill of lading, is that you can affect automatic, change in what, delivery, contract delivery, temperature change, the same thing.
Presumably the parties could agree to amend the original,
Right.
if they wanted to. Yeah, you're right, John. I think that containerization is the easiest way for this, and probably the smallest way to begin. Sure.
From a processing point of view, can you speak to the how a bill of lading works with a letter of credit? In that, if you digitize a bill of lading, but you still have to pay for a letter of credit, or you still potentially elected it?
I don't know whether you'd end up with a paper letter of credit. A letter of credit, you have to show up with a bill of lading and a bunch of other documents packed in this way in order and get that into the stream of commerce. I assume that everything would be electronic. That there would only be electronic documents that would be presented electronically to the bank. That would then,
I suppose the problem for the bank is where they've issued a bridging loan by way of letter of credit. Their security is physical possession of that bill of lading. So if it's electronic, how do they solve that problem? I don't know the answer to that. I'm sure people in this room do know the answer to that. Whether it's some
I'll help out, sorry.
Thank you.
So if you use an electronic bill of lading, you need all the parties to also use the same system, so you can transfer between parties. The bank will also use, for example, Bolero to receive presentation of that bill of lading along with all the other supporting documents.
That's sweet.
So everyone has to use the same system. So the diversity of actors is one of the reasons why this hasn't really taken off in great areas. But it's an interesting point about cargo versus container, because the guinea pigs has not been containers. The guinea pigs has been bulk shipments. And I would love it to be container shipments, to be honest, with a lot more of those, but it's harder for carriers to change their process, to issue electronically for one container and ship for many than to do one process versus the other process. So it's more of a process thing. But if there's any carriers in the room, I'd love to hear their perspective on that as well.
One of the sea bill of lading are container are reducing, and there's more sea bills being more used and an account for the trade finance. So all the reasons that we discussed, bill of lading are losing ground, not the trade, but it's clearly losing ground as we see. So it's could be good also to remind everyone in the audience that bill of lading is not the only way to work the documentations. It is actually losing ground, and it's expensive. It's tedious for the bank as well, it's tedious for us, and still there are a lot of people involved
I don't think there's no magic in having to do bill of lading, but if you're going to substitute the bits of paper that we all see, you've got to have something else. There's got to be something which tells you what the condition of the cargo was when it went on board the ship. There's got to be something which evidences the contract under which the ship has agreed to carry it from A to B. What liabilities, what exemption clauses, as Kessal was saying earlier, what law and jurisdiction clause.
It's trust as well, more and more limitations are going, people know each other, they've been dealing together for many years now. So
That is absolutely right. I go back to my old cargoes between Italy and Libya, where there were never any bills of lading, they trusted each other. And that works absolutely fine. And I mean, we've all seen that since the collapse of shipping, Q4 2008. You had all sorts of charters. You had these great long charter chains, 17, 18, 20 people in the charter chain. What's the first thing that happened? Everyone fled to quality. So owners only chartered their ships for first-class chartering. You had people down the charter chain saying, I want to see the whole charter chain before I decide whether to take the ship. No, I'm not taking this ship. There's two dodgy people in that chain. So you're absolutely right. People trust each other. There's absolutely no problem at all. Sadly, or possibly very happily for the lawyers here, it's slightly utopian. But you're right. The major trading the trading houses, the Dreyfuses, the Cardinals, the Nobles, people like that, they have very few problems because they're trading with people they know and trust, and then they solve their problems.
Any other question?
I just wonder as a ship owner whether this utopia in terms of insured risks, whether insurance companies that insure ships and their adventures would necessarily be happy without, on the basis that it's okay, I trust this trader, we've dealt with them loads of times before. I think the answer to that's no of cover. So there's still a big insurance risk there that your insurers may not be happy with.
That is important. Whatever you're doing, you need to talk to your insurer. Your P&I club is not going to sanction you delivering a car without production bill. You're off cover.
Just because you trust the guy.
Just because you trust. I take your point entirely. If you've got a good relationship, you can do it by bank guarantees, security, all sorts of other things. The people that the three of us tend to see are perhaps at a slightly more shonky end of the market. Otherwise, the employers. It's a very technical legal term. Hans, should we pass over to Paul, who's the expert on the level?
Yeah, absolutely. Thank
Who
you.
can tell you all about it.